Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Night video for August 1st, 2018. And we're talking financial stocks. Back on our review of the financial names, the top 8 holdings in the XLF ETF, which is where we'll start our analysis. The last time we took a look at this was June 21st, with the XLF down at support 2650. And since then, about a month later, we've had this rally straight up into our target. And that's where we'll begin this analysis for tonight and the week ahead. The XLF is into 2832, which is our key spot and marker from earlier in 2018 and just a little bit of 2017. So we do have this trading range with the midpoint just shy of 2750. What does that mean? This market is into resistance, and just like we had our briefing in the prior video, we're looking either for a rally up away from this or a breakdown and a sell swing beneath it. The same logic applies. We're going to expect probably a sell swing down against resistance, playing to about 2750, and beneath that, to keep this range going, 2650. So if you're looking to sell some premium up here, this would be a good spot to do so, or to put on short positions, or just watch this and trade this through individual names, which we'll see shortly. The alternate thesis, which would be our breakout, would trigger above 2850. And we have a lot of open air space to 30 per share. So this will be our focal point as we go through this week and into the next, really as we start August and to the rest of the year. Will financials hold their resistance targets, or will they break free of resistance into an open air zone, which is going to give us some more bullish plays and would be supportive of additional upside action in the broader indices? But until that happens, the S&P is into resistance, as is financials. We'll take a look at individual components. Berkshire Hathaway, probably a stock that we don't trade, but one that makes up roughly 11% of the XLF, is staying put at 200 per share. Notice what you'll see in most of these components is that these stocks have broken above their trend line. That was from our last update, giving a bullish upside play, but they're stalling similarly into achieved resistance targets. So Berkshire Hathaway has its spot marker pivot at 200 per share. We can see it compress. I like to show you the daily charts on the left and then the hourly charts on the right, just for shorter term trade setups. And looking at this, we have a triangle forming. I think it's probably best to relate this as a sideways line and a ceiling at 200. If the broader XLF ETF is to go lower, probably would see it start first with a downside play against 200 per share and an entry into this little spot from Berkshire Hathaway. Next up is JP Morgan. Now, JP Morgan takes also about 11% of the XLF ETF. Similarly, it had its own bullish breakthrough. Remember, the last time we talked about these, we were at support, looking for any type of bullish dominant thesis action up away from these pivots. Not only did JP Morgan do so, but it broke the falling triangle trend line to trigger this bullish breakout. And it has achieved 117.50. That's a spot marker for JP Morgan. Watch it if you're trading this short term with respect to about 15.50 per share and just above 117. Selling premium might be a good idea above 120, or taking short positions or otherwise bearish plays into this candidate, with the alternate thesis being a bullish breakout to new highs. Again, that would correspond or give the building blocks for a future breakout in XLF. That's why it's going to be important to watch these names, these resistance points and targets, even if you don't trade them. And in Citigroup, not to be outdone, remember, I keep the perspective on the XLF. It's up into resistance. Our Citigroup stock pushed up away from, just as expected, 66 per share, broke through the trend line, and extended higher. Its target was 73. That target has been achieved. So you'll sort of get the picture that we are looking to take profits on any open positions on a swing basis and look to establish hedges or bearish activity into these pivots. That right there takes up about 25 to 30% of the XLF, just in Berkshire Hathaway, JP Morgan, and Citigroup. Up next is Wells Fargo. So Wells Fargo had its breakout. Not really as clean, not really as perfect as a pattern. It did chop through resistance points, 50 per share, 53.50 per share, and then upwards of 56. So it is above its moving averages, and there's not really a resistance target that we can see here. Maybe if we want to be sneaky, we can count this as a high, but about 58.50 per share for Wells Fargo. Not really a great candidate for a trade in either direction. So I would look to the other candidates either into resistance or playing other opportunities. Now this one does have one. This is Goldman Sachs. It's just shy of 240 per share. So 240 per share is roughly an easy spot to play a resistance play. Notice we have this rising trend line and a break recently beneath 238 and 236. That's going to be your spot to watch for Goldman Sachs trades. Bullish plays, alternate thesis for now, if above 240, and that opens up a pocket play, an upward momentum swing. If Goldman Sachs shares break above 240, you could see a play $5 higher to its prior price spot and its moving average. But again, that's the alternate thesis until it triggers. Until then, we are looking for additional downside action just to play against a resistance swing in price. USB, US Bancorp. It also broke out, but not really having a great spot of resistance. Its pivot play is up against 53.50, but that's not a lot there. So our reference point is the moving average, 53. But again, this one is playing not perfectly, not giving a well-defined risk reward, but it, like the others, did break a triangle trend line earlier, and again, choppy action, not what we'd like to see. We'd like to see additional bullish play on a break of a range contraction pattern, but that's not what happened. So US Bancorp probably is not a great candidate using the methodology here. And then Morgan Stanley. It's interesting because it went a little bit deeper on this sell swing. Now, Morgan Stanley is a good example of why we don't just look and think that every single financial stock is going to do the same thing. If they all bounce off support, fine, we can just take any position in any XLF stock we want, and that's not the way that the marketplace works with swing trades. We typically want to find that which is stronger and then play stronger stocks and stronger outcomes with movement. Morgan Stanley is a weaker stock, especially compared to Berkshire and JP Morgan. And the case in point is that it didn't really break its falling triangle trend line. It is beneath the moving average, and it is into, if we sort of draw this out, 51.30, just shy of 51.50, its resistance pivot. So again, there's not a lot of play here. From 50 per share to 51.50, that's probably best left toward intraday traders or future breakout opportunities above 51.50, but probably beneath 50 per share. Not a lot to play between these areas. Finally, PNC. Take a look at PNC, and PNC Financial gives us a breakout, but it is stalling, like many other names, into its 200-day simple and the prior spot marker pivot point. Resistance, support, support, resistance, and resistance. Just about 146.50 per share, under 147. Like the other names, we do see candidate positions for a short sell or for bearish opportunities up against resistance. So if you did join into bullish sides, bullish plays up away from key support levels, remember our broader XLF up away from key support, up into key resistance, PNC monitors this very closely, follows the XLF very closely. And that's what's supposed to happen. Individual components make up the index, and some components are stronger than others, some components are weaker. Main idea, as we go forward, watch your 28.35, 28.50 per share level Expect a dominant thesis sell swing. Play that through options or through individual intraday or swing trades, but be on guard for an alternate thesis bullish breakthrough beyond all these resistance levels. This is Corey Rosenblum, and you're watching the Theo Night video, August 1st, 2018.